Hi, Brock VandenBerg, President of TaliMar Financial, your Trusteed broker and mortgage fund manager. I wanted to make a quick video for investors that are currently on the fence about investing in a mortgage fund. For many investors that have invested in Trustees for a long period of time, the thought of investing in a mortgage fund can be daunting. I understand. I mean, why change something that isn't broken? However, I want to highlight some of the advantages of a mortgage fund. Before I get too far in this video though, please consider giving this video a quick like and subscribing to our channel. We post a ton of great content about investing in Trustees, our mortgage fund, before and after photos of projects that we complete. I promise you, I think you will find it interesting and educational, though I have been told by my daughter that I need to spice it up a little, so we'll go ahead and try that in this video. So let's first start about discussing the primary differences between investing in Trustees and a mortgage fund. For those completely new to investing in Trustees, investing in a Trustee is like becoming the bank and lending money to a borrower using their real estate as collateral. Just like a bank, you as the Trustee investor are lending money to a borrower who promises to pay you for that money every month, quarter, year, or at the end of the term of the loan, which I highly discourage. If they fail to meet this obligation, you have the right to foreclose on the property and recoup your principal and unpaid interest and fees, etc., from the sale of that property. That is why they call it Trustee investing. Your loan is secured with a deed of trust on the property. For a more detailed explanation, I would recommend you check out my video on investing in Trustees. A Trustee investment, the mortgage fund follows kind of the same principle. The biggest difference, however, is by investing in a mortgage fund, you're investing in a portfolio or basket of loans, not just an individual Trustee. When you invest in a Trustee, your name is on that deed of trust and that borrower is paying you the monthly payment. In a mortgage fund, on the other hand, the borrower pays the fund the monthly payment and you, the investor, are earning a distribution every month, quarter, or year from all the payments on the loans that are in that fund. Just remember, in a Trustee investment, you are the direct lender. In a mortgage fund, the mortgage fund is the lender, and you own an ownership in that mortgage fund. In both cases, your security is the underlying loan secured on the real estate. So why are mortgage funds a better option? The biggest reason the mortgage fund, in my opinion, is a better option is that you are diversified over a portfolio of loans. If a borrower stops making a payment on an individual Trustee, your income doesn't stop. That is because you have all the other loans in the portfolio that are still paying. The same concept covers loan payoffs. If you are a Trustee investor, when your Trustee pays off, your income stops until you find a replacement Trustee, which in today's market can be very difficult. In a mortgage fund, on the other hand, you still earn a return because of all the other active loans in the fund, though you might see a slight decline in the return on the fund until the proceeds that came from the payoff are placed into a new loan. The second biggest reason why a mortgage fund may be a better option is because it's much more passive. As a Trustee investor, you first must connect with a broker that you can trust to provide you a healthy pipeline of Trustee investments. Then you're required to review each Trustee, and when you fund that Trustee, required to service it, collect the payments and whatnot. If the loan goes bad, hopefully your broker will help you through the foreclosure process, but at the end of the day, it's your name the borrower will see on the promissory note, the deed of trust, and any foreclosure notices. Geez, God forbid that the borrower sues you, you'll be named in that suit. In a mortgage fund, on the other hand, you're just one of many investors in the fund as a limited partner. The third biggest reason a mortgage fund may be a better option is that the mortgage fund attracts better loans. I'll say it again, a mortgage fund will attract better loans. As a Trustee broker converted mortgage fund manager, I can absolutely attest to this. In most cases, a borrower or mortgage broker will prefer to work with a direct lender, such as a mortgage fund, versus a trustee broker, because mortgage funds can typically offer a much smoother closing. For a trustee broker, they must underwrite, approve, and then raise the money for each loan request. Don't even get me started when they're required to schedule multiple wires for a multiple investor loan. Creates immense confusion amongst the escrow officer, the borrower, and whatnot. For a mortgage fund manager, on the other hand, the fund manager simply underwrites and approves the loan, eliminating that third step of actually having to raise the money. You can imagine if you're a borrower or a mortgage broker, depending on a timely closing, eliminating the need to raise money for each loan makes the mortgage fund a much better option for either one of those parties. In fact, if I'm competing with another hard money lender on my loan, I will ask if my competition is a mortgage fund, and if it's not a mortgage fund, a mortgage broker, 9 times out of 10, that loan will come to me. The fourth reason a mortgage fund may be a better option is that you can invest in the fund when you want and request your money back when you want. Unlike a trusteed investment, you can only invest your money when a trusteed investment becomes available. And again, in today's competitive market, that may be a couple of weeks or that could be a couple of months. Forget about trying to get your money back. That only happens when the trustee pays off. The trustee investment model makes it much more difficult for an investor to create consistency in their trustee portfolio. On the other hand, a mortgage fund allows for much more consistency. Mortgage funds can typically activate new investor capital within a couple of days, and investors can always increase or decrease their investment when they want. When it's time to take a withdrawal, the investor doesn't have to wait for a specific loan to pay off, but rather any one of the loans in the portfolio to pay off. The other advantage of a mortgage fund when it comes to keeping investor dollars active in loans is the use of leverage. I'll post a link to why we use leverage in our mortgage fund to manage capital inflows and outflows. The fifth reason our mortgage fund may be a better option is because of the tax treatment. Because TaliMar Income Fund 1 is a real estate investment trust, the fund qualifies for the qualified business income tax deduction. With Qubit, only 80% of the income earned from the REIT is taxed. The other 20% is a non-taxable event. Now you'll need to talk to your CPA if you qualify, your tax planner, to see if you qualify for the Qubit tax deduction. But I did a quick calculation, and because we're allowed to use this tax treatment, the return will increase by roughly 1/4 to 1/2 point. So it's a decent return when you earn that tax credit. So this video is not to say that trustee investments don't have their advantages. The biggest advantage that a trustee investor has is that they can individually select the trustees that they invest in. And this is true. Trustee investors have the ability to review every offering and decide if that's right for them. Again, that assumes you have the time. In today's competitive market, you may only have a couple of hours to review a trustee offering because investors are knocking down the door of trustee brokers to be the first in line for their offerings. No, and I know many of you ask, we do not have a preferred list of trustee investors. The second reason why a trustee investment may be a better option is that you don't necessarily need to be an accredited investor. What is an accredited investor? An accredited investor is somebody who has a net worth of $1 million or greater, exclusive of their primary residence, or someone who has made $200,000 or greater over the last 2 years, or $300,000 inclusive of their spousal income, and expect to make that income the following year. Just remember, the mortgage fund requires you to be accredited. Trustee investments do not. In today's highly competitive market, the mortgage fund is probably a better option for most trustee investors. As long as you've done your due diligence on the fund and the fund manager, are comfortable with the types of loans that they are funding, and have reviewed their current loan portfolio, the fund offers numerous advantages over individual trustees. I want to say thank you for listening to me today. Remember, if you liked what you heard, please like this video and consider subscribing to our channel. We post a ton of content regarding trust deeds, mortgage funds, before and after photos and whatnot on that YouTube channel. If you're not currently invested with TaliMar Financial or a mortgage fund, please reach out to my investment team on the number below, and we'd be more than happy to chat with you about the types of trust deeds that we offer and our mortgage fund. We're actively raising money for our mortgage fund, TaliMar Income Fund 1, so please give us a call. For those that have not already signed up, we do offer the lender portal. Our lender portal lists all the trust deeds that we currently have available. You can view the details on the trust deeds and actually subscribe to those trust deeds online. In addition, it lays out specifics on the mortgage fund, all the stats, including the types of loans that are in the mortgage fund, location, property type, duration. In addition, we list out all the loans in the mortgage fund. So again, if you're interested in learning more about investing with TaliMar Financial or the mortgage fund, reach out to my team and keep your eyes open for more content that we will be posting on our YouTube channel. Thanks for listening. Look forward to hearing from you soon.